What impact do you see them having on the market if they continue to rise? Where do you see them going and finally stopping?
So for the 10-year, we've been projecting 4.8 to 5%. And on the 30-year, we do think it will go to 5%. We do think if we reach those levels that we'll find investors that haven't been able to lock in a risk-free rate in a very long time, in 16 years, actually. So we think that can detract from the equity market. We think it will be challenging for the markets. So we've been anticipating a market pullback, and we think that pullback is going to be very choppy, and that can actually go all the way through October.
You know, you're actually calling for more than a pullback, according to your notes. You're actually calling for a correction, 5 to 10% for the S&P, even more for the NASDAQ. Now, a lot of these two indexes, they have a lot of those big tech names that really dominate them. Why do you see a deeper pullback for the NASDAQ? What's the catalyst for that?
Well, it's pretty simple math. S&P was up 15%, NASDAQ was up 30%. So what goes up the most will come down the most. So that's why it just gets a deeper correction.
Okay. Are there certain areas of the NASDAQ you see especially hit? Is it just simply mega cap tech drawing both of them down as we see pressure from valuations and higher yields?
It's probably going to be across the board, but mega cap tech certainly would be a major impact.
Okay. Looking more broadly, we're seeing some downgrades of U.S. banks. Right now, it's regional banks, but we have heard, there are some thoughts by these rating agencies, Fitch and Moody's, that they're also going to look at the larger banks. How do you see that weighing on the markets today?
This has been an area of concern for us. We've been calling banks value traps. The stocks may look very cheap, but we don't really want to go there because of the concern of higher rates, the concern that the unrealized losses are growing on the bank's balance sheets. And the banks that are most vulnerable are the regional banks. And, if we continue to get downgrades, this is going to weigh on the banks.